Hey guys, I want to do a little video on the similarities between auction market theory and market profile trading with ICT trading. And there's three main similarities that I've noticed. The first is unfinished auctions and liquidity in ICT terms. So, right, in ICT terms, liquidity we'd be looking for a lot of things like relative equal highs, and I'll kind of go and mark some of these off, right? We have right here, we have these equal highs, and then we have these relative equal highs. And then same thing, we kind of have relative equal lows down here, relative equal lows right there, and right there. And so, and you can even see like right now, we just took this out. And so these relative equal highs and lows or equal highs and lows often provide good targets in ICT strategies, right? You're looking to target these areas. And in market profile or auction market theory, you often do the same as well. You often look for these areas to be taken out, and they would often call it being repaired. So a poor high or a poor low would be somewhere, for example, you see up here, right? We have these highs. A poor high or poor low on the TPO would be somewhere where we have a flat area like this, right? We have a lack of exhaustion, right? If we had real exhaustion, we'd want to have a selling tail up here. We'd want to have a move up and then an abrupt move down, rather than having this right here where we're just flat. And then you can also have poor lows or poor highs where it's not actually flat, but it's kind of just like we have only a few TPO letters below right here. And right, like these ones where we aren't creating an excess, like right here would not be a poor low because we have this excess down at the low and we didn't spend that much time there. But in these other cases where we're not, where we're spending more time there, we're creating no excess. And so these become targets for repair because they're unfinished auctions and there was a lack of exhaustion at that low or at that high. And then the second thing is the singles. And so singles and fair value gaps can kind of be the same thing because it's somewhere where we spent few time and we often look for these to be defended. So an example right here would be we have singles right here, which is somewhere in between the profile where we have a single letter, meaning we went down and we didn't retrace back up into that in the following, essentially in the following TPOs. So you can see right there, we have that straight move down. And so that would be singles. And it's the same thing with the ICT stuff is we're going to see these quick moves down where we have no real retracement. And so if we put it on the 30-minute, that would be a fair value gap, just like we have singles right here. And then the third thing that is similar is the view of market structure. And so in auction market theory or market profile, you would consider it OTFU or OTFD, one time framing up or one time framing down. And that would be based, if we're, for example, we keep breaking lows and we're not breaking the highs, then we'd be one time framing down. And to stop one time framing down, let's say we're one time framing down, right? To break that, we want to break this high. And then we can start one time framing up. And so that coincides with the concept of market structure where we're looking for lower highs, lower lows, and then we're looking for a break of the high and to reverse in structure. And same thing, if we're making higher highs and higher lows, then we want to see a break of a low and then reverse in direction.